What's up, everyone, and welcome to the daily macro update for Thursday, September 18th. Taking a look at some of the headlines here. We are post Fed meeting, and the market has been given the green light by the Fed in order to rip higher. And as we can see, taking a look at the S&P 500, now we're about 10 minutes away from another all-time high close. And essentially the signal that the Fed gave yesterday was that inflation is no longer a problem. The labor market is softening. It's not yet at levels that are concerning, but it's at a rate right now where we're trying to get ahead of further softening from here. And so essentially they're trying to time it or get ahead of it as inflation is running well above their 2% target. In fact, the target, or not the target rate, but the September inflation rate across the board, so headline inflation, core inflation, personal consumption expenditures, and core PCE all are being shown to accelerate to 3%. And this is well above the Fed's 2% target, but as Jerome Powell stated yesterday, that inflation is just a one-time event, which is pretty interesting. Testing. Can you guys hear me all right? For whatever reason, is the microphone working all right? Test. All right, let's try that one. That might be a little bit more clear. In any case, getting back to the video here, what people have to remember as well is that inflation is cumulative, right? So when it comes to, the reason why prices are expensive, you have to realize that we're not going the other way, right? And so inflation, if inflation is coming down, that means the rate of inflation is decelerating, right? That means that it's not going up as fast. But just from looking at the cumulative inflation numbers over the last 5 years, you can see that a lot of the things that we buy on a monthly basis, all of those things went up, by 30% or more, right? So you always have to remember that inflation is cumulative, and that just because the rate of inflation is coming down does not mean that things are getting less expensive. It's just the rate of things going up in price are slowing down. Now, one thing that I also want to visit as well is that Jerome Powell mentioned how services inflation is trending downward, and so that's one of the reasons why they're okay with cutting here. But when we take a look at services inflation over the past 6 months, really since March of this year, it's pretty much remained flat. So for him to go on TV and say, they're making headway on services inflation, that's completely false. There hasn't been any progress on services inflation, less energy services, since March, really. So, as we know, services is the largest component of our inflation number. When we take a look at medical care services, that's actually been accelerating for the past 3 months, right? So, since June of this year, it's been elevated and continues higher. Taking a look at, if we just look at services less rent, right? So, this is the services component of the inflation report, taking out of consideration the rent component, right? So as you can see, when it comes to the whole services component, rent has really been the main driver over the past few months here, where again, really since March, services inflation has actually been going higher. And this isn't related at all, maybe indirectly in some cases, but generally, this has nothing to do with the tariff inflation that's going on, right? Which is what he's mainly blaming it on. So, and you can look at other types of services inflation as well, but yeah. So I mean, for him to say that services inflation is coming back into balance is just completely false, right? So when we look at the rent of shelter component, that's really what's been declining. But obviously, when we take a look at services without this component, it's actually been going up. So the Fed could be making a policy mistake here if services inflation remains sticky or continues higher from here, like it's already been doing over the past 3 months. We did get a decent lower number for the initial jobless claims, and then we're also starting to see continuing jobless claims start to come down a little bit here from its peak, all the way back in mid-June of this year. And so, if you start to see the labor market continue to come back into balance, right, maybe not as bad as what we thought, as well as we potentially see inflation remaining sticky, well, then the Fed is going to reverse on everything that they're doing so far. So, yeah, I mean, by all means, we're seeing growth rebound, we're seeing inflation continuing higher. There really, there's some cases for a Fed cut, but really, in my view, there's more cases than not, looking at the current trend. One thing, though, that I would like to mention is that when looking at the Conference Board's leading economic index, that still continued to contract, but mainly it was due to consumer expectations, right, as well as new orders. But yeah, so I mean, I think that inflation is going to continue higher from here, and it's not just me saying that, right? The Cleveland Fed inflation nowcast was suggesting that, but also too, when we take a look at the 5-year break-even inflation rate, that's had a pretty decent 2-day acceleration from when they cut rates. And just looking at this compared to this time last year, right? We can see that when they cut rates by 50 basis points last September of 2024, we saw that this was near 1.9% for the 5-year break even, right? So now the bond market is suggesting that the 5-year break even is 60 basis points higher than that. So, I mean, I definitely don't think, I think the Fed is making a mistake saying that, one, inflation is a one-off event and they don't see it spiraling and it's mainly due to tariffs. Just by looking at the metrics that we just saw, that's factually not true. And then you also have the bond market starting to price in, stickier inflation as well. The 5-year break-even inflation rate really has not changed since the beginning of the year. If you just look at where it's at, right? Pretty much the entire year of 2025, it's remained flat, which is, pretty close to, and it looks like it's rising. So this isn't continuing down further, right? It had a pretty stark reversal after that first rate cut. So if you start to see it go up from here, it's not going to be good for the Fed at all. I don't even know how the market is, giving the Fed credibility still. So, yeah, pretty interesting there. When taking a look at bond yields, those have also had a little bit of a bounce here. So, that's interesting. You still have low volatility, a little bit of a reversal here in gold. So we'll probably make some positions on gold once it gets down to the low of the trading range. Bitcoin's having a rebound. Obviously, stocks at new all-time highs here, about to close in about what? A few seconds. Yeah, in about 20 seconds here. So new all-time highs, yet there's still a huge percentage of the market that remains bearish, and I'm not sure why. So, yeah, let's go ahead and take some questions here, and then we'll go ahead and wrap it up. When do they take the punch bowl away? Probably not. They're most likely going to continue cutting rates. Some people are saying inflation will spiral. One second, just looking through some of these comments here. The Fed is making a mistake cutting into growth and into increasing liquidity. Liquidity has actually taken a little bit of a step back, but yeah, it's interesting there. I'm now short the markets. I think we see a 5% pullback at least. Well, I mean, you still don't want to be short the market when it's in a bullish trend. That completely goes against. You could be right here, but I mean, I'm not shorting this market at all. They said that we wouldn't return to 2% until 2028. Yeah, exactly. They're always 2 years out, right? They said this even 2 years ago, right? Back in 2023, that, we're going to, by now we'd be at 2%, which we're not clearly. So, yeah, somehow they magically have inflation dropping significantly next year, which I don't think is true. Inflation based on a rate of growth of the money supply should trend lower of 2% is the target. Well, not necessarily. You have monetary inflation and then you have price inflation, two separate things. Typically, you have monetary inflation first before actual price inflation, but they're two separate things. You always have to remember that. Okay. And then within price inflation, you have two different types. You have demand-driven inflation, and then you have supply-side inflation, right? Demand-driven inflation is that you have a fixed amount of goods and demand is high for those goods. That's going to increase the price. On the opposite end, or on the other side, you have demand remaining constant, but you have supply declining. That's also going to increase prices, right? So, right now we're having a little bit of a combination of both, right? So you have demand dropping and you have supply dropping as well. So it's pretty interesting here. What's your take on Intel, seeing that NVIDIA has invested a huge amount into them? What's my take on it? I mean, it's in bullish trend. That's about it. I had a huge spike today based off of that news, but yeah, I mean, it's just in a bullish trend. Would not be buying it here though. Definitely you want to wait for a pullback if you decide to do it, but yeah, it kind of broke out of this channel that we're seeing right here. Right. So we'll see. We'll see if it ends up reversing to the upside, but I definitely would not be buying it here. That's for sure. Be patient. It's okay. So it's amazing how so many people feel FOMO when it's like, relax. You'll have another shot on something else. Somebody asked about SoundHound. This has been one of our team's nice plays here for the start of the year. We were buying it back at the beginning of August, and since then has a nice little 50% plus pop here. Definitely is in a bullish trend. SoundHound looks like it's about to make a run. I mean, not about to. I mean, it's been on a run. Yeah, I mean, SoundCloud has been on a pretty decent run here, pretty much for the past 4 months, 5 months. So has gold reached the top despite persistent inflation fears? Might have missed you covering it earlier. I mean, who knows if gold has made a top or not? What I care about is that it remains in bullish trend, and so anytime you get a dip in gold, I'm buying it. That's all I need to know. All right. Well, yeah. So I mean, in other words, the Fed could be making a huge policy mistake again, like we saw in 2021. It all depends on where inflation and the labor market goes from here, and so that's why the first week of the month, which is all about labor market data, that's going to be highly looked at, as well as the second week of the month, which is all about inflation data, that's going to be looked at as well, right? So the next Fed meeting is on October. I think it is the end of October there. Let's see. October 29th, and currently there's about a 94% chance that they're going to cut again by 25 basis points. That'll bring the Fed funds rate to 375, between 375 and 400 basis points. So we'll see what happens from there. And yeah, I appreciate everyone for joining. If you guys haven't already, we have a free newsletter where we give you the trend as well as the current trading range for the day. Every single day before the market opens. So if you guys want to be a part of that, just send me a DM, the word daily, DAILY, or you can just go to macro-optics.com/daily, and you can fill out the form there so that you get those in your inbox each morning before the market opens. All right. Well, I appreciate everyone. Have a great rest of your Thursday. And no stream tomorrow with it being Friday, but we will catch you in Sunday's Sunday Macro Wrap Up at 8 p.m. Bye, everyone. Have a great weekend.